Most traders lose everything during a high impact news because they are looking at the wrong time frame. While the 15-minute chart may be lagging, a 3-minute time frame internal market structure shift is signaling a reversal right before your eyes. Stop being liquidity to the bank, anticipate the reversal before the candle closes. Hello there guys, and welcome back to Eagles FS. In this video, I will show you the specific 3-minute time frame internal market structure shift that I use to get funded in Gold Funded Trader. This 3-minute time frame market structure shift is a strategy I adopted that helped me to make series of withdrawals in Gold Funded Trader. So if you're a pro-firm trader, make sure you watch this video to the end, because at the end of this video, you will learn this hidden secret that will help you to make withdrawal in your pro-firm journey. Let's go to the charts. All right, this is gold, SAUSD. Now, looking at the screen now, you will see what I drew here. Let me explain. If you come to your chart on a 15-minute time frame, you are looking for a buy. This strategy, you can only apply it during London section or New York section. So when you're looking for a buy and you notice that 15-minute time frame, the price is bullish. What do I mean by bullish? Price is creating higher highs and creating new higher high, taking out the old high and creating another new high. Okay? So when you notice that price has created a new high on 15-minute time frame, all you need to do is to do what? You come back on the 3-minute time frame. Okay? So as this price is coming down to create a higher low, when you go to 3-minute time frame, it will create an internal market structure like the one you are seeing on the right hand side here. It will create an internal market structure. So on the 3-minute time frame, price will be doing what? Price will be downtrend. Price will be coming, creating lower lows and lower highs. In this format, price will be creating lower lows and lower highs in this format. Lower lows and lower highs. Lower lows and lower highs. Now, all we'll be waiting for is internal market structure shift. As this one happened right before you, you can see it, the price closes above the previous lower high, thereby causing a change of character. Okay? So what do I mean? What I mean is that when price closes above the previous lower high, the place that I have marked now, it means that the trend on a 3-minute time frame has aligned to bullish as the trend in 15-minute time frame. So all we'll be waiting for now is to take a buy at this zone. There are two zones we'll be looking for now. Check out for other block that caused this move at this zone. Or at times, you also notice another block in between here. You notice there's another block in between here. But why do you know the other block that you used to take this entry? Now, let me show you. When you see these two other blocks, one at the start of the move and the other one at the middle of the move, you wait for this price to return back to this other block. Let this price return back to this other block. Okay? Now, ask yourself, this particular other block, does it have a fair value gap? If it has a fair value gap, there are high chances. Okay? But if it doesn't have a fair value gap, there are chances that this price could come down to this other block. So, number two, you ask yourself, when price come here on this 3-minute time frame, do you see a bullish engulf candle at this zone? Do you notice a bullish engulf candle signifying that buyers have set in? If the answer is yes, then prepare to take your buy. If you notice a bullish engulf candle at this zone, you do what? You're prepared to do what? To take your buy. And when you take your buy at this zone, at the close of that bullish engulf candle, your take profit will be where? Just target 1:2. Target 1:2. 1:2 will be your take profits. 1:2. Just target the next liquidity, the opposing liquidity. 1:2 will be your target. So let's go to the chart and see how this is performed. All right, this is good, SAUSD. And currently we are on a 3-minute time frame. Now, let me show you the one that plays out today. But I didn't take it because price failed to return to the zone that I was expecting price. Now, look at what happened here. When you look at this zone, you notice that price was moving up, creating higher highs and higher low. Okay. And at this zone, there are a shift in market structure here. Price close and create a lower low. Okay. This place, there is a shift in market structure. Show a shift in market structure. All right. Let me expand it. Now, what happened is this. When this price shifted, okay, and another thing that we take into consideration is this shift in market structure. When does it happen? At what time? The rule says it must be during London section or New York section. The key zone. So, if you look at this zone now is a shaded zone. I use Los Algo key zone, okay? So, I've done a video on how to set it up on your chart, okay? You can set this up on your chart. This is Los Algo key zone. This is New York section. I have it here also at the London section. You can see the one for London section here. Okay, entire zone. Let me highlight. You can see this sky blue zone. This zone, entire zone represent my London section. This is when active participant enters into the market. Majorly, this is when news are released, and majorly this is when more traders enter into markets. So there are more liquidity during this key zone hours. So that's why I only trade this strategy during this key zone hours. So let's go. You notice that there is a shift in market structure here. So you find that price want to go bearish. So what I was waiting for is to price to return to this other block. That's this other block that's caused this shift. That was what I was waiting for. But price failed to return to this other block. Okay. Rather, price used this other block here. And price starts, okay, matching down. Price used this other block here. So I let it go. I didn't take this trade. So now let's look for another example. Let's look for another example. This was one that happened during the London section. You can see that price was initially coming down. Price was initially coming down. And suddenly there's a shift, thereby causing a change of character at this zone. So all you need to do is to wait for price to return back. You can see another block here. Price return back to this other block. So immediately price return back to this other block, you wait for what? A bullish engulf candle. And you pick a buy. Like this. You pick a buy. Price below this zone. And you target 1:2. The opposing liquidity. You target it. 1:2. You don't need much. Okay. Now let's try another example. Let's look for another example. Okay. So this particular one. Now look at it clearly. When price got here, price started lower low, lower high, lower low, higher high. Price started moving up. Okay. Price started moving up. And boom, there's a change of character. So price returned back to this other block that caused the change of character. At the beginning of, you can see this one, at the beginning of London section. You come and see it, price gives us a bearish engulf candle at this zone. So when price come to this zone and give this bearish engulf candle, the entry is here at the closure of this candle and stop loss above this zone. I always say target the liquidity, opposing liquidity here. This one is about 1:3.1 ratio. But normally, the target is always 1:2. Once you get 1:2, you leave the market. This is scalping, okay? It's not a swing trade. But this one delivers 1:3:1 ratio. Let's look for another example and we close. You go and practice. Let's look for another example. Okay, see this one. Can see this one. Price was coming down. Price was coming down in this format. Price was coming down. Lower low, lower high, lower low, higher high, thereby causing a change of character. And price return back to this other block. Okay, price return back to this other block. And price started moving up. This time around, price didn't signal up, price didn't give us a bullish engulf candle. Okay, but yet price delivered. So in this scenario, when you don't have a bullish engulf candle, all you need to do is have to wait for price for a candle that will close above this black candle, bearish candle. So this time around, we have a very large stop loss on this case. The stop loss will be big. Because entry will be here. Stop loss will be below the zone. And target 1:2. All right. So basically, if you take this approach, believe in me, and sooner or later, you'll be a profitable trader. Stick to one trading strategy. Stick to one trading timing zone. And stick to this pattern. You will thank me. Make sure you go and practice this video. This one is change of character. Okay? In my next episode, I will do break of structure, continuation of trends, break of structure, continuation of trends. So if you like this type of content, make sure you subscribe. And I know you like it. So make sure you subscribe so that you update when I drop a new videos. See you guys in my next episode.